Hi friends, Professor Joe here. I hope you all are doing great. Welcome to this video. In this video, I'm going to explain how straddle and strangle strategy actually works. You have understood what is a call, what is a put, what is a long call, what is a long put. So in this video, we are going to explain what is a long straddle and what is a long strangle. How does the calculation work so that when you are entering into a long straddle or a long strangle, thinking that because of some news, the price is going to move either high or either low? That means after the news is released, depending on the sentiments of the people in the market, the price can go up or the price can go down. Now, you want to capture that price movement, but you are not sure whether the price will go up or whether the price will go down. Now, if you would be sure, you wouldn't need to go into a strangle or a straddle strategy. You could have directly gone with a long call or a long put. But when you combine both a long call and a long put, how does the calculations work? A lot of people are confused about it. So in this video, we are going to cover that. This videos that I'm creating on straddle and strangle is a series of videos. So there are individual videos on long call, long put, short call, short put. I will be giving the link in the description. So kindly go through those videos if you don't understand the basic. So first understand the basic, then you will be able to understand the combinations of option strategies. A warning caution I always give in my videos, especially in options. Option trading is highly risky. So until and unless you don't understand all the aspects of option trading, please do not start trading options. In a long straddle option strategy, a trader or an investor is entering into two trades. One is a long call, the other is a long put. Now, both these trades, the strike price is going to be the same. The expiry will also be the same. The premium can be a little bit here and there, it can be different, not necessarily it's going to be exactly the same because it depends on the strike price. The long call and the long put both will be taken at the money. Okay, these are the features of a long straddle. In case of a long strangle, everything remains the same except for two things. So the instrument remains the same, the expiry remains the same, only the strike price will change. Okay, the strike price is changed and the call is taken out of money. So this is the minor change which is there in straddle and strangle. We will have a look at both in this video. Okay, straddle first and then strangle. One another important thing when you are entering into straddle and strangle, remember both are buy. That means you're buying a call and you're buying a put. In both these cases, you have to be sure that the price is going to move in either direction. Because if the price does not move, then as the option reaches its expiry, because of premium decay, you will lose the premium. There will not be any increase in the premium and you will lose your premium as the price reaches close to the expiry date. So it is very, very important that when you are using this strategy, you should be sure that the price is quickly going to move up or down. Best days for such kind of strategy is like a budget day or a big announcement from the finance ministry or a big announcement from the RBI. These are days when big movements are expected in the markets. So these are the days where you can use these strategies. To understand long straddle, you need to understand what is a long call and what is a long put. So first we draw a P&L line and we say this is a profit and loss line. P and L line. Then we draw the zero line. So zero line means at this particular level, the profit in the option is zero. And then we go up, we put 100, 200, 300, 400, 500. Like that, we go here, minus 100, minus 200, minus 300, minus 400. This is where the market is currently. This is the ATM. ATM is say 2100. So instead of 2100, we will write only 21. Go back. 20, 19, 18, 17, 16, 15. So it is 2100, 2000, 1900, 1800, 1700, 1600, 1500, 1400. Okay. And then as we go ahead, 22, say 27. The assumption is 2100, 22, 2300, 2400, 2500, 2600, 2700. Now, when an option trader is entering at 2100 and the option trader is going for a long call, and the premium is 100 rupees. So the option trader is starting with minus 100 rupees. Now that is the maximum loss an option trader has. This red line will not increase to minus 200, minus 300. It's going to be minus 100 only because it's a long call. And then from 2100 to 2200, the option trader's loss is reducing. From minus 100, it will become minus 50, and then at zero line, it becomes minus 0. And from here, as the option price, as the market goes up to 2300, 2400, 2500, 2600, the option trader is making profit. So at this level, the option trader is at a 100 rupee profit. At this level, the option trader is at a 200 rupee profit. At this level, the option trader is at a 300 rupee profit. And this level, the option trader is at a 400 rupee profit. Now, at these different levels, the option trader is at a different profit. But say if the price is going down, it is going to 1900, 1800, 1700, then the option trader has another option. The option trader can go with a long put option, where the option trader will make profit when the price is going down. So if the option trader want to enter a long put, then the option trader starts over here, whatever the price is, and the ATM at the money is say same 2100. So the option trader is paying the same 100 rupees. Now, how much ever the price goes up in the long put, the option trader's maximum loss is 100 rupees. So from here to here, how much ever the price goes up, the option trader is at minus 100 rupees. But as the price start going down from here to here up to 2000, the option trader's loss is reducing. So from here it will become minus 50, and then at zero line it becomes 0. And then the option trader in a long put will start making profit as the price goes down and down and down. So at 1900, the long put will be at 100 rupees profit. At 1800, 200 rupees profit. At 1700, 300 rupees profit. At 1600, 400 rupees profit. At 1700, 500 rupees profit. Now, the drawing is not that perfect because I'm manually doing it. When the strike price is at 2100 for the call and for the put, so this I will say it's the call side, long call, and this is the put side. And one more thing you have to remember in this simulation is that this side is the increase in price and this side is the decrease in price. So that also we will write. As the price goes towards the left side when you're watching the screen, the price is decreasing. And as it goes to the right side, the price is increasing. Now, when you are entering a long call and a long put, you have invested 200 rupees because you are putting 100 rupees premium for a long call and you are putting 100 rupees for a long put. So, how will your profit line look? So, basically, your profit line will start from minus 200. It will look something like this. So, from minus 200 till 2300, your loss is decreasing slowly, slowly, slowly till it reaches 2300. And from 2300 onwards, you are making your profit. So when you are entering a straddle, your profit will start from 2300. Then when it goes to 2400, you are at profit. Okay. And the same thing is in the downward direction. If the price start going down up to 1900, you are not making any profit. Your profit starts once it goes below 1900. Start with minus 200 over here because you are going with a long call and a long put. So your break-even points is not 2200 anymore. Now it becomes 2300 and 1900. So we'll write B break-even points. So that's your break-even point for your put. side and break-even point for your call side from where you will start making profit. So this is how a long straddle works. So on the budget day, in the previous video, we explained that you should go with a long straddle. This is how the entire long straddle working looks like. Okay, so at every single point, remember, it will not be plus 100 over here. Here it will be 0, and then it will become plus 100 at this level, plus 200. So let me just write it. So at break even point, it is going to be 0. Remember, that's your 0 line. So your profit will start over here, and then it keeps going. Same is the case on this side. Your profit starts from here, plus 100, plus 400. So everywhere it requires an additional 100 pips of movement because you have invested 100 rupees premium in a long call and you have invested 100 rupees premium in a long put. So there you go. This is the working of a long straddle. Now in a long strangle, what is happening is you are not entering at one strike price. You are entering at two different strike prices. Say example, your premium is 100. So you enter with 100 rupees premium. But instead of 2100, you are entering at 2200. So up to 2200, your loss is 100 rupees. As it goes up to 2300, you reach your break even point for your long call. And as the price going keep going up, your long call start making profit. So like we explained last time, at 2400, you will have 100 rupees profit. 2500, you will have 200 rupees profit. 26, you will have 300 rupees profit. And say we will put at 27, you will have 400 rupees profit plus 400. Now remember, you are not sure about the direction, so you want to go with a long put also. So in a long put, now what is happening? You enter, but this time in a long put, instead of 2100, your strike price is 2000 and your break even will be at 1900. Only once the price goes below 1900, you start making profit, just like last time. But now your profit is starting from 1800. So here you will make 100, here you will make 200, here you will make 300, here you will make 400, and here you will make 500. So plus 100 plus 500. This is your long call and this is your long put. This side the price is declining, decrease price. This side the price is increasing. Because you are not sure about the direction, you want to enter in both the directions. What we have shown over here is the calculation. If you go with a long call, this is how your profit is going to be. If you go only with a long put, this is how your profit is going to be. But if you are entering both, so remember, your strike price is over here and here. So between 2000 and 2200, you will be at minus 200. And then as the price keeps going up, your loss is reducing. And once it reaches 2400, you are at break even. Same way, from 2000, as the price keeps going down to 1800, at 1800, you are at break even. Now, when the price either continues upwards, your profit starts over here. And when the price go downward, your profit start over here. So when you are in a long triangle, only once you cross 2400, your profit starts. 100 rupees you will earn when the price is over here at 2500. So at 2500, you're going to earn your first 100 rupees. Then 2600, you make your next 100. 2700, you make your next 100. Same way, when you reach 1700, you're going to make your first 100. 1600, you're going to make your next 100. 1500, your next 100. And so on as the market keeps going down. And this is how the working looks like. So as you have already seen that how a straddle and strangle works. So friends, in this video, we have tried to understand what is a straddle and what is a strangle and the working, how the calculations work when you are entering into a long straddle and a long strangle. So it is very, very important that you understand the working before you start using this strategy for trading. And remember, this strategy has to be used only on those days where you think there is going to be a huge price movement. Remember, trading and investing Both requires a lot of practice, patience, and persistence. All these three things are equally important. You have to give your time to learn trading and investing. That's all in this video. If you love the content that I'm creating, please like and share these videos. So like you, there might be many other people who are confused about Straddle and Strangle. They will understand through these videos. There are many other videos I create related to options, trading, forex, banking, investment banking, and personality development. So kindly subscribe to my channel so you are updated whenever I release a video. All I can say is keep learning, keep growing. Thank you. Namaskar.